If you're writing off 100% of your meals, you're probably doing it wrong. And if you don't write off any of your meals, you're leaving money on the table. Most business owners have heard that meals are a write-off, but I'm here to tell you that that's a big problem for a lot of business owners. Because when I take over books, they're all over the place, writing off every single meal that they incur. And that's because no one ever explains to them which meals are a write-off and how much can be written off, and then why some meals are only 50% deductible. Today, we'll break down the meal deductions under Tax Rules 2025. What's deductible, what's only 50% deductible, and what doesn't count at all. And at the end, I'll show you why this only matters if you're tracking the right numbers for your business. Most business meals are 50% deductible. That's because the IRS assumes that most meals have some personal value to them. So they're going to limit how much you can write off. There are some exceptions where you can write off 100% of the deductible of a meal, but those are very rare and very specific. And we'll get into that in a little bit. First, we'll go over the 50% deductible meals. The first one is the client meals. So you're meeting up with a client to discuss what type of work you're going to perform for them, and you buy them a meal. Well, that's deductible, but only at 50%. Some stipulations that you have to meet is you, one, have to be present, or one of your team members has to be present there. You have to discuss business while you're doing that, and it can't be extravagant or luxurious. Another one is meals while you're traveling. You can buy your own meals for yourself while you're traveling, and they define this as you're traveling out of your state, your home city, into a different city, and you're staying overnight. If you're not staying overnight and you're just going to travel back home, then the meals are not deductible. Then also, if you're buying food for like everyone in your office, like for coffee, snacks, or just office like food for your employees, not just specifically for you, but for your employees and stuff like that, you can write that off at 50%. Now, for some of the 100% deductible meals. You can throw parties, like holiday parties, outings, or like team building activities. You can buy meals for that whole party, and then you can write that off at 100%. But all employees have to be invited. It can't just be for like the top tier employees. You have to be able to invite everyone in your business to this, and then you can write that off at 100%. You can also write off meals included as taxable compensation. This will go on their W-2 as income, but it is 100% deductible to the business. Some things that aren't deductible whatsoever are personal meals. You yourself as a business cannot buy yourself a meal and write it off. It's just not gonna happen. If you're gonna buy yourself a meal, you have to be traveling, or you have to buy it with someone else while you're discussing business. Family dinners, you can't count that as a meal. You can't buy groceries and label them as meals. It's just not gonna work well. And no, you can't write off any meals that have no clear business purpose. This is where, writing down everything comes into play, because the IRS is really scrutinous about the meals thing because it's very easy to take advantage of. So they're gonna want every little detail about, all right, you want to save your receipts, and then you also want to write down or type out the reasoning for the meal. Like, how is it related to business? What business was discussed? Who did you have your meals with? Have everything written down. In case of an IRS audit, then you can just send that to them and say, hey, listen, it's legit, this is reason why. You have to have all of these categorized correctly. You have to have your 50% deduction meals in one category and your 100% deduction in another category. This is so important because if you don't separate them, your CPA who is doing your taxes isn't going to know which is which, and you're not going to be able to take advantage of the 100% whenever you do throw an office party, or whenever you have a meal that is 50% and you don't put it in that category, and say you put it just as a personal expense when it should be a 50% deduction, you're losing out on that. And then vice versa. If you put your personal stuff into where you're not supposed to, you're going to be in trouble whenever the IRS audits you and you have no paper trail of how that Wendy's that you bought for yourself on a random Tuesday when you didn't leave your city, is deductible. It's just not, so you're not gonna be able to prove it. And all of these add up quickly. You may think that $50 client meal that you had in January really isn't a whole lot. It's not gonna move the needle a whole lot, right? Especially whenever that $50 is only gonna be deducted for $25 because it's 50% of it. Well, it adds up over time. If you're having client meals throughout the year, you could end up spending $1,000, $2,000 without realizing it. And then, that if you had spent $2,000, that's $1,000 deduction that you're just missing out on. That is what money left on a table is. Now that you understand how meal write-offs work under the 2025 tax rules, the next step is understanding where these numbers even show up in your business. And that's exactly what I break down in my last video, where I break down 5 numbers that you need to know as a business owner. Once you understand that and watch this video, numbers become easy and understandable like that.